All right, Belly, thank you so much for joining us on the telecast. Meanwhile, gold prices slipped on October 3, retreating from record high as investors booked profits amid caution over the US government shutdown and Fed policy outlook. Despite this, the long-term outlook for precious metal is optimistic due to strong fundamentals on the multi-commodity exchange. Gold futures for December delivery declined rupees 643 or 0.55% to rupees 1,16,945 per 10 grams in a turnover of 15,733 lots, snapping a 5-day winning streak. Now, joining me on the telecast is a guest, Dr. Sharat Kohli, senior economist. Dr. Sharat Kohli, obviously, we've been seeing that gold prices have been soaring to a record rally, and there's a myth around festivals that gold prices, the numbers, the rates rise due to festival, and a lot of people buy it. Do you think that the statement and the sentiment is true?
Good afternoon, Ria. Can you hear me?
Yes, I can hear you, Dr. Sharat Kohli.
No, you're right. That is a myth because gold prices or Akshay Tritiya or Dhanteras or wedding season has got nothing to do with the gold prices. Broadly speaking, the gold prices are regulated from an exchange in America called COMEX, commodity exchange. In India, we call that exchange as MCX, multi-commodity exchange. The prices open in America. Accordingly, it gets traded on MCX. The Sarafa Bazaar Association in India, who trade in gold, then they convert the ounce into 10 grams and they convert the dollar into rupee and they open the prices. You're right. I think the shutdown is contributing even more because it is causing a lot of political and economic uncertainty in America, which is supposed to be world's financial superpower. It is supposed to be world's financial center. The stock markets around the world, they open taking cues from America. It is said that America sneezes and the world catches cold. So obviously a shutdown in that economy is obviously helping the gold prices. But this is very recent, Ria. More importantly, the way Federal Reserve and other central banks are buying relentlessly. They have been buying since last 2-3 years now. American gold reserves now are more than 8,000 tons. Indian gold reserves are close to 900 tons now. China 5,000 tons. So I think we are getting back to the gold standard, which used to exist in 1971 when President Richard Nixon of America abolished it. I think we are getting back because dollar as a currency, Ria, is getting weaker. Vis-a-vis Indian rupee, it may appear that it's getting stronger. By the way, Indian rupee is getting weaker. There's a difference between rupee getting weaker and dollar getting stronger if you go into technicals of foreign exchange and economics. But vis-a-vis other currencies, Ria, dollar is getting weak. British pound, Swiss francs, euro, Japanese yen, it's getting weak. The dollar index, which is a basket of 6 currencies, it used to trade around 106, 107. It's down now to 97, which is a 50-year low. So dollar is losing its relevance. The de-dollarization, I would say, has gradually started thanks to President Trump's trade war and isolation or over-protectionism policy that he's waging the war against as far as the world is concerned. That is not helping. Contributing to this also is the geopolitical situation. Russia-Ukraine, things have aggravated. Tomahawk missiles, I think Russia has warned, do not send Tomahawk missiles to Ukraine, otherwise it will escalate the war. Baltic countries, there's tension building up on the Europe-Russian border. You know, I think so everything is contributing, and somehow gold and silver, Ria, they like all this. You know, gold thrives when there is, I put it in inverted commas, when there is ashanti around the world, when the world peace is disturbed, when the stability around the world is disturbed. So I really don't see any of these factors turning around anytime soon. So the investors who are watching us right now, they are advised to park 20% of their portfolio. I would advise that to you also, Ria. 20% of your savings should be in gold and silver by way of ETFs. Or if you can store bars and coins, but do not invest in jewelry. Lot of people are going and buying jewelry. Jewelry, you lose making charges, you lose impurity, you don't get 24 karat gold. So you're advised to either go for bars and coins, or the best is ETF. They lie safely in your demat account, and people should invest in smaller lots. And a very important message is you should invest for a longer time. Do not look at short-term movements. I heard when you were reading out MCX lots being traded. So there are two components of gold price. One component is the real buying and selling, and the other component is the speculative tendency in gold where a lot of contracts are bought and sold on a monthly basis. So that makes the gold price fluctuate a lot. So do not get worried if gold comes down by 2,000, 3,000. You know, I keep seeing videos on YouTube where they say gold dharam and gold has fallen and this and that. I think that is all speculative. It's called profit booking. Long-term trend of gold and silver, Ria, is on an upside. And I think people, when they're not able to make money in stock markets, the bank fixed deposits and the other asset classes are not giving that great returns. I think gold and silver are shining, besides shining in their literal form, Ria.
And Dr. Sharat Kohli, as you were talking about ETFs, bars and coins as well, you talked about profit in terms of buying this. There's a profit booking that you talked about. What exactly does that mean in terms of experts that are suggesting that you should not be investing, staggering investment instead of spending in one go, where you split some money into several parts, and which helps in average out cost as well as in reducing risk? How exactly is the best strategy for buying gold and silver in these times?
Nail on the head. You're absolutely correct. You should not park all your money at one go. I think a staggered, we call it as an SIP, although SIP technically means a systematic investment plan in mutual funds. But SIP is also a methodology. You can, as you said, staggered, put smaller pieces, go for every week. You know, suppose you have to park 1 lakh, divide them into 5 parts or 20,000 each, and keep watching the gold prices. Every time they come down by, let's say, I normally follow in the US dollar in ounce, but even if you're following the 10-gram price, every time they come down by 2,000, 1,000, put in your 20,000, wait for a week or wait for whenever it comes down. Yes, staggered investment is the way to go, and long-term investment is the way to go. These two thumb rules apply for all the people who are looking at gold and silver at the investment, and you should be looking at gold and silver at the investment. Yeah.
All right, Dr. Sharat Kohli, thank you so much for joining us on the telecast. Now we'll slip into a short break. Don't go anywhere.